In today's episode, we're exploring ways to reduce taxable income for ministers. Ministers often face unique tax challenges, balancing their roles as both employees and self-employed individuals. Today, we're going to uncover some effective strategies to legally minimize taxable income, with a special focus on salary reduction agreements and the option to refuse part of one's salary, which I found that interesting, so I don't know if you know about that or not. So whether you're a minister looking to optimize your tax situation or simply interested in the intricacies of clergy taxation, this episode is packed with valuable insights and practical advice. Let's get started. Hello, friend. Welcome to the Church Finance and Minister Tax Podcast. My name is Michelle Brown, and I am honored to be your host. In this podcast, we will discuss topics to help you organize, maximize, and utilize your God-given talents and skills so you can do what you do best, which is take care of the business side of the church and do it with excellence. If you are a church secretary, bookkeeper, administrative assistant, or any other superpower title you've been given, then this podcast is for you. So grab your notebook and pen and your favorite beverage, and let's get ready to learn something cool today. Hello, and welcome to episode 68 of the Church Finance and Minister Tax Podcast. We all know why we're here, so let's go ahead and dive right in. But first, here is today's episode quote by Miss Amy Porterfield, who is the go-to expert for creating online digital courses. Amy says, "I don't even realize how good it can get, but I'm willing to try and find out." And that's what I'm doing, folks. I am trying something new and seeing how it goes. I would love to direct you to www.churchfinances.org/course waitlist. I am in the final stages of creating my first course. It is called Intro to Church Finances, and I am super pumped. I finished completion of my workbook this past weekend, and now I have started on recording the videos to get this all put together, and I am hoping to have this out to you within the next 30 days. So if you are a church bookkeeper, a church treasurer, anything to do with finances, even if you are thinking about starting a new church, or you're a pastor who knows that your church needs guidance in this area, this is the course for you. So again, go to www.churchfinances.org/course waitlist, all one word, and get signed up. And as soon as this becomes available, you will be one of the first ones to learn. To know that it's being released, and I will talk about it more over the upcoming weeks to let you know more of what's involved, okay? So now on to the episode. Believe it or not, as part of your church's finance team, one of the group's top priorities is to help minimize the tax liability of the minister's income. I can tell you from experience, many ministers are not that well versed in the U.S. tax code system, and also are not too many finance gurus, all right? They are there to share the gospel to the members of their church and to help equip them for the work of the gospel. It is up to the church treasurer, the bookkeeper, the personnel team, the finance team, whatever title you have within your church, to take care of the finances of the church, and that includes the minister's compensation package. As always, we will preface this with the dual tax status of the minister, which means that they are an employee, considered an employee for federal income tax purposes, but they're considered self-employed for Social Security and Medicare taxes, which means as a church on a qualified minister, you do not withhold FICA taxes on them. They have to pay in self-employment taxes, okay? So the first area we're going to talk about are pre-tax deductions. And as always, we need a good definition. So a pre-tax deduction is an amount subtracted from an employee's, in this case the minister, gross income before taxes are calculated. All right. This reduces the minister's taxable income, thereby lowering the amount of income and self-employment taxes that the minister owes. Common examples of some pre-tax deductions for church employees include contributions to retirement plans, such as a 403B, health insurance premiums, housing allowance, and even charitable contributions. These deductions are beneficial because they reduce the minister's taxable income, resulting in tax savings. So the first thing we're going to talk about are retirement contributions, all right? And we want to utilize the tax advantages that 403Bs bring. So in 2024, the contribution limit for the most that an employee can contribute to a 403B account out of their salary is $23,000, all right? Then the limit on annual additions, which is the combination of all employer contributions and employee elective salary deferrals to all 403B accounts, generally is either the lesser of $69,000 in 2024 or 100% of the includable compensation for the most recent year of services. All right. So what that means specifically for ministers is that in most cases, housing should be excluded from compensation for retirement plans due to the special tax treatment of housing allowances. Section 107 of the tax code specifies that housing allowances are not included in gross income and therefore not considered includable compensation. So for example, if a minister's given say $24,000 every year as a tax-free housing allowance, and again that's tax-free from federal income taxes, not self-employment taxes. But if he's given $24,000 every year in housing allowance, this money would not be included in his gross income for the year and would not be added to includable compensation. So what that means is if your minister makes, just to make it easy, we'll say $50,000 a year in annual salary, $24,000 of that is for a housing allowance. That leaves $26,000 as regular salary, so only $26,000 could go, but the amount of deferral in 2024 is only $23,000. Okay, so you cannot include the housing allowance in that. So now that we've kind of gone over the basics of contributing to a 403B retirement plan, which is good because it helps to reduce that taxable income. And what that means is that the amount that you contribute to the 403B is not subject to these taxes, okay? So, which means, err the word pre-tax. So that's a good thing, all right? So now let's shift our focus to another significant tax advantage available to ministers, and that's the one that we just excluded from the retirement contribution calculation, but that is your housing allowance, okay? You have heard me say this before, and you will hear me say this until Jesus comes back or they do away with housing allowance. But as a church, you are doing your ministers a disservice if you are not making at least a portion of his salary housing allowance. Okay? The housing allowance exclusion is the biggest, most beneficial tax-free benefit to ministers because, just as I said a while ago, it's not subject to federal income tax withholding, the allowable part, okay? When you're calculating housing allowance for the church, your minister is going to say, okay, I think my anticipated expenses this year are $24,000. The church designates $24,000 as housing allowance, okay? Regardless of how much their actual total pay is. There are no stipulations, again, in the regs that say what percentage of a minister's salary can be designated as housing. The only stipulation is it has to be reasonable compensation for the minister for the job they're doing in the area that they're doing it in, for the size of church that they're working with, okay? So if $24,000 is their total salary for the year and $24,000 is what their housing expenses are, you absolutely can designate 100% of those funds as housing allowance. And at the same time, if their salary is, their total compensation package is $50,000 and $24,000 is designated as housing allowance, then you've got 24 as housing, 26 as salary, but only the 26 is subject to the federal withholding. Okay, so that is how the housing works. Now, when it comes time to pay taxes on that to determine how much is actually excludable from the federal income tax, it follows the least of three rule, which is the allowable housing allowance exemption is the least of the actual expenses, the designation from the church, or the fair rental value of the home fully furnished plus utilities. Okay? All right. So your first way to reduce taxable income legally is having these pre-tax deductions such as 403B contributions. Okay, the next big way is going to be your housing allowance, and then next is charitable contributions or donating part of the salary back to the church. All right, so suppose, again, we're going to stick with the 50 grand. Suppose your minister is receiving a salary of $50,000 from the church. The minister decides to donate $10,000 back to the church. All right, so this works the same way it does for every other donor in the church. The minister needs to either write a check or however they donate, online giving, whatever it is, drop it in the plate, and for the $10,000 or, over the course of the year, and ensure it is deposited into the church's account, okay, and not used for your personal benefit. You need to keep a record of the check or the donation receipt, all right? And then you need to report the donation on your tax return. You do report the full 50 grand as salary, as income, but then you deduct on your Schedule A for donations the $10,000 as a charitable contribution, all right? And then up to 60% of that, of your adjusted gross income limit, is a deduction for you, okay? So you've got brain drain. You've got your 403B contributions, which lower your tax liability. You've got your housing allowance, which tremendously lowers your tax liability. And then you've got your charitable contributions. And again, keep in mind, depending on your total deductions, charitable contributions may not come into effect so much on federal if you're not above the annual standard deduction, but it can most definitely in many states make a big difference on your states, because like I'm in Kentucky and the standard deduction in Kentucky I think is like $3 grand, $3,500, something in between $3,000 and $4,000. Okay, well if you're contributing 10 grand, that's definitely a lot bigger than the other one. Okay, all right. And then another way that you may not think about, but I think is totally interesting, is a refusal to accept the full salary. All right, so what on earth does that even mean? I'm going to tell you, because we like definitions. So refusal to accept a full salary means a minister voluntarily chooses not to take a portion of their agreed upon salary, and this reduces their taxable income, leading to potential tax savings if it's done correctly. Okay, and of course I'm going to tell you how to do it correctly real quick. Okay, so according to Treasury Regulation 1.451-2A, this outlines the concept of what's called constructive receipt of income for tax purposes. It states that income, although not actually in the taxpayer's possession, is considered constructively received in the taxable year it is credited to the taxpayer's account, set apart for them, or otherwise made available so they could draw upon it at any time. Okay, so basically what this means is just because you say, you know what, the church is falling on hard times, I'm not going to take a salary this year, we'll make it up later. It doesn't matter. Okay, if that's what your salary is, then you are still reporting that income as if it was received, because it was constructively received, because you will get it at a later point. All right, here's how you get around that. So if a minister specifies where the money is to go, it's taxable income. Example, if the minister says keep the money and do with it as you will, and the minister has no expectation of intent to withdraw the money at a later time, and no desire of how the money is to be spent, then it's non-taxable income. All right, so imagine a minister, we're going to call him Pastor Gary, has an annual salary again of 50 grand. To reduce his taxable income, he decides to refuse $10,000 of his salary with absolutely no intent of drawing the money later or with any direction on how the funds should be spent. So he only receives $40,000, okay? So it's not like in the previous thing where we talk about the contributions. He's not contributing it back to the church. He's just not even taking it, okay? So by doing this, he lowers his taxable income by 10 grand, which can decrease his overall example. All right, so he just says, I don't want it, keep it, do with it what you want, okay? Tax-free. On his W-2, the only thing that's going to show up is that 40 grand, all right? Same example, but Pastor Gary wants the $10,000 he's refusing to go to the building fund. Then, at that point, he just constructively received the money by stating how it was to be sent, and he made it taxable income to himself. See the difference? All right. So there are court cases which have decided with each decision on whether the income is taxable or not, but the quote-unquote reasonable basis for determining whether the amount refused is taxable or not is if the minister assigns for the money to be used in a specific manner or leaves that decision 100% up to the employer and church. All right. So I'm going to give you some steps to properly document a refusal to accept full salary. And, depending on the circumstances, this may never happen in your church, but at the same time, you never know what God has planned, okay? So I just want to make this available to you so that you know, okay? So the first thing you need to do is you need to have a written agreement. Everything's got to be written down. You need to create a written agreement between the minister and the employing church or the organization. You need to clearly state the agreed upon salary and the portion the minister refuses to accept. Okay, you need both. And then you need to include the effective date and the duration of the salary refusal. Number 2, board approval. You've got to obtain approval from the church board or whatever your governing body is, and you need to ensure the approval is recorded in the official minutes of the church, okay? Just like for housing allowance approval, it needs to be whatever your governing process is to get it in the official minutes for official approval. You need to do the same thing for this refusal. All right. Number 3, amend the employment contract. If necessary, you can amend the minister's employment contract to reflect the salary change. If you do that, ensure that both parties, both a representative from the church and the minister, assigns that amended contract. Payroll adjustments. Adjust the payroll records to reflect the reduced salary. And, that's just common sense. Number 5, maintain records. Document. Okay, documents are your best friends. Whether it's physical paper copies or digital copies, it doesn't matter. The IRS just wants documentation. Keep copies of all related documents, including the written agreement, the board meeting minutes, and any amended contracts. Keep them together. Okay, keep them together in the minister's file as well as any other place you want to keep them, but keep them and maintain thorough records for IRS review if needed. And then just do an annual review. Review the arrangement annually to confirm whether it's going to continue the next year. Make any adjustments if necessary, or if this was just a one-time, God just laid it on his heart for this particular year to do that, then make sure you get that changed. And then again, document any changes or renewals of the agreement. All right. So I'm going to give you a final example. Pastor Gary again, he agrees to refuse $10,000 of his 50 grand salary. He and the church create a written agreement stating this decision. The church board approves it, and the approval is recorded in the meeting minutes. The payroll is adjusted and all documents are filed properly. Each year, Pastor Gary and the church review the agreement and make any necessary updates. All right. By following those steps, Pastor Gary ensures his refusal to accept part of his salary is legally documented and compliant with tax regulations, because he's not going to designate that it needs to be spent in any particular way, so it is not going to be taxable income to him. All right. And that's a wrap. That's a wrap. So thank you again for sharing your time with me today. And let's all strive to make an impact and not just an income. Remember to always look your best, do your best, and be your best. Talk to you soon. Bye-bye. Thanks again for listening today. If you haven't joined my free Facebook group community yet, you can check it out at facebook.com/groups/church bookkeeping and clergy tax. And also, if you've not signed up for my waiting list yet for my new course that's coming out, it's www.churchfinances.org/course waitlist. Please know that no matter what is going on in your part of the world, God's got you, girl. Be blessed, my friends. Bye-bye.